Okay, so good morning. We start the streaming for today, which is Thursday, the 8th of June, 2023. So we will check everything like we do every morning. We have the London Open in 10 minutes. So let's start with the setups. On the price exertion indicator, we have nothing less short on the 1 hour. Then if we look on the momentum exertion, we have the same with the short on the 1 hour, daily and 4 hour in the middle of nowhere, and the weekly on the long side. What does it mean? It means if we get a nice push down, we will get a wonderful long setup today, which would be really great. On the short term setup chart, which is this one that we use every day, we have the 5 and 15-minute confirmation system. So we have nothing for now. Of course, as I just saw, we are on the high on the 5-minute 7 period. So we could see a little bit of push lower on the open. I have a long running from earlier at 107.07. I banked 10 pips and I'm now waiting. We'll perhaps take a short on this open due to the 5 minute, due to the 1 hour. I will try perhaps to get a short. We'll see what happens. And I still have a short running from the top yesterday. We had a call here yesterday for a short. So that's what I have running now. So I just took a small short here, 107.18. I'll write it there. So like always, very tight stops, break even immediately. I am already at break even on this trade. Okay. So we could see something due to the fact that we are nearing the London Open. We'll see that very soon. We could still push higher. Of course, that's why I kept the long I have from this morning. I didn't banked it, sorry. I prefer to risk to lose gain than to miss a long, which is what we said yesterday on the streaming with the setup we have now. The long side, we offer 1,500 pips of reward medium term. On the short side, we have a risk of 200 pips or something like that. So the decision is clear. What would be wonderful now would be a nice big pullback. Concerning the pullback, same thing as, oops, made a mistake here. Same thing as we saw yesterday. We have here this confluence of area that we would love to see. That would be really wonderful. This area over there, it would be really nice. The channel top with this 38.2 fib, the 50%, and then we would look at the 38.2 with the potential extension to the channel bottom. But this is the second area where we would be looking at. Very important areas. So ideally, from a technical point of view, when we have a channel like we had, we break through it, we look for a clear retest of it. So what would be very nice this morning, if we could get it, let me take the brush, would be, I don't know for any reason, would be to see a back test of that thing and then go up. So if we go down fast, we could backtest it with a confluence here on this 50% fib, which would be great, and then bounce from it. So this is the ideal scenario from a technical perspective, and we will see if we can get something like this morning. That would be absolutely wonderful. Then if we keep on with this, let's say, scenario, we take the extension of this move to the lows of that move over there. We extend it here. I didn't prepare that. So you see, we would have the extension. I will take this off. We would have the extension here of the 1-to-1 of that move down. If we put it with the ABC, perhaps we would have the 1 to 72 extension. Let's take this low, this high. Mostly it's not perfect. So you see we have the 1 to 72 extension right there. Okay. So if we dip here, it's very good. We will beat a great long setup, and we will be able probably to close that technical demand of a retest of this area. I hope that's clear for everybody. I'm just checking that I am still recording. The sound is okay. Everything is okay. So that's great. So we'll see what we get. We have some momentum pumping in now, which is great. Just when we took this short, London Open in 4 minutes. So we will see if we accelerate on the open and break this. You see that yesterday, we could not break the Asian lows of the 31st here. We could not break it. We went on it. I was expecting to see a continuation. We didn't get that continuation. So let's see if we can get it now. That would be very nice. And then for that, we need to break through this and this 61A. Then when we break that, we are inside that potential ABC down and the big one that is there. So if I take off this one here, just to have a cleaner chart for now, if I hide this one and keep on the biggest one, which is this one, you see too that the one-to-one extension of this one is mostly here. So that would be really great if we could get this area. Between here and there, we have a nice confluence, which would define mostly this area, as we already discussed, as a very important area of interest on the bounce due to the setup that is in place already on the long side, on the big time frame. So we need drop to be able to get a nice long on all the time frame, short and long time frame at the same time. Okay. So London Open now. I'm back in a few minutes. In 1 minute. Okay, I'm back. We have the open. Again, Shiva is the sound on. I mute you, Shiva. Good morning. So now, two options. We have the open, so or we break back up and we run up. The thing which is a little bit bothering me there is this. Okay, so I would need to get a nice long to get the 4 hour, the 1 hour, and of course we would get the 15 and the 5 minute on the long side. Then we would have all together with the weekly. I point this again. If you look at this weekly chart, you see how the weekly is. So we are back on the weekly long now. So any big drop will offer a very nice long setup. Not immediately, especially when the 1 hour is there. So it needs to come back. If we look at that on the 1 hour, we have a more precise reading on the 1 hour like here. So we are on the top. We need a pullback. Let's see if we can get this pullback in the open. That would be great. We have two important data today. One is the European estimated GDP for the quarter. The other one is, you see, we are now on the Monday Asian high. We are pushing in the 910. So we'll see if perhaps at 910, around 910, I will try a long again. So concerning the data, 11 o'clock, we have European GDP. 2:30, we have US unemployment. So that will be important because we know the unemployment is key now in the US. As soon as it would start to offer some cracks, that would be, of course, bullish for the USD, but that would be confirming the recession. There have been a lot of things written. You see, we are now on the 4 hour, 1 hour. It's tempting here because we have the 4 hour, we have the 1 hour and the 4 hour together here. I took a long right on this Monday Asian high. So we'll see if we break that on the open now. That would be a big sign because we have there, let me show you on the dynamic support resistances here. You see, we have the 1 hour and the 1 hour and 4 hour together. So what does it mean? When they get melted on a 2 time frame like this, it means we can go anywhere, or up or down, but after a move like this, it's opening every door. So that's why it's important to look at the time pivot and the setup, even if the setup is not really opening a bullish side now due to the 1 hour that is already extreme, but we could push inside that extreme reading on the 1 hour for a long time before seeing another turn. So I play the setup for now, which is the 1 hour short. I took this short earlier. And I just took a small long, not what I would like to be. I want to be big long at 107.058. This is my long now. And we'll see what happens right on this thing here, which is here. You see it. So there is several reasons, which is the 1 hour there. We have the 4 hour. I can grab it here and so we will have both of them on this chart. So you see, this is the 4 hour and the 1 hour together with this Monday Asian highs. So it's really tricky here, really tricky because that's a big support there. We have the Monday highs. You see, we have used them very well here, and we have this confluence of 2021 EMAs. As I just said, the break of this would be probably signing for a longer pullback, a deeper pullback, sorry. $9.05. So we know in many cases between a few minutes before the open till the 9:10 we can get a fake move. Then if that's the fake move of the 9:10, we would bounce out from there. If it that despite the 1 hour here. If the market really want to break higher, which is what will happen sooner or later, we have room on the 4 hour, on the daily, a lot of room on the weekly, even I don't speak about it. So there is a lot of room on big time frame, and this 1 hour can struggle for hours, even days, if we have a strong move starting. So that's why it's important to have a bias as we have. In that case, the bias is long. When we have a confluence like this one at this time of the day, we just cannot ignore it. We take a risk. It's a very controlled risk. We have a very tight stop under this long. If we break, then the short is running from earlier at the start of this move. So the only risk is to take a small loss, but not to miss the big bounce if it happens. For now, what I see is we come back here. I just added back here at 107.055 some longs. The time is perfect. On the short setup point of view, short-term time frame setup point of view, there is nothing yet. Nothing yet. The last setup was a 5-minute long. So what I do in that case, I look at the last setup, which was a few minutes ago, a long setup of this bounce. We have the London pre-open opening fade period move, which is there. So we could have had this move. We have a fade move to shake a little bit the longs, and then, the longs, and then we could run high. So we'll see that very soon. If it doesn't happen, then I let run my short, because it would mean we would break lower, and this break lower could keep on till we get the European news, for example, the European data in some time. I had a meeting, but it was postponed to 10:15, so my 8:15 meeting has been changed. So I will be out a little bit after 10 o'clock till 10:30, but I will be here for the European data. Okay, so if we look, this is the weekly thing. If we look at the important thing here, you have only the unemployment claim. Then I will change the filter to put the less important one. So there, if we look at today, what is that? Okay, so if we look at today, as you can see here, we have the unemployment claim here, and we have, we don't have it here. That's really weird. Yes, we have the revised GDP, and the it's not written on this one. That's why I don't use a lot the Forex factory data feed, because it's not giving a lot of information, even especially not the right one. So let's go back on this one. Change the date, put today, 8, search. So you should see, so we have all at 11 o'clock. This is what I wanted to look at with you. We have the revised QQ, and we have the unemployment finance. So we have some data. It's not the provision, it's the revise. So we could have some revision higher or lower. We see that the revision is a little bit lower. It was plus 0.1 on the quarterly. Now it would be 0, plus 1.3 on the yearly. Now it's plus 1.2. So this zero would came this morning being a minus something, which means a negative quarter. Everybody will start to get mad with that and say, recession. No, a recession. I remember somebody in the room had said that the country was in recession. I think it was Germany. A recession happens only as soon as the US do not change the rule like they did last year. The recession is official when you have 2 quarters in a row, consecutive quarter, with a negative GDP and not minus 0.1, something a little bit bigger. Okay? If you have one negative GDP, it doesn't mean we are entering in a recession. That's from the analytic point of view. So we had a negative quarter, which means we have a recession on the quarter, but it's not categorized officially as a recession. It's always a question of time frame. What time frame do you use to consider recession is on or not? If you look on a monthly, it means you have 1 month of negative. It doesn't mean you are in a recession for the year. As well as if you have 1 quarter of negative GDP, it doesn't mean you will have a negative GDP on the year. So it's always important to put things in perspective and to keep a cool mind without getting involved by the crowd overreaction, excitation, and things like that. It doesn't change anything. We cannot change our view just because something has been said or there have been a good or a bad data. It will change the attitude intraday. It will not, never, ever change the long-term perspective. Unless there is something very deep happening, in that case, it would change it. But it can, even one FOMC cannot change a long-term perspective. Okay? Okay, it looks like we are bouncing 9-10. So if we bounce here, we would run and hopefully till the European data. We will see what happens anyway. We have the time channel coming later. We have several. Well, we don't have several. We have little data today, but we need to see what happens here. If we bounce here, if we can bounce, we have the 9-10. So we would need to see something happening now. We would need to see if we want to be nice on that long, comfortable on that long, we need to see an acceleration and take those high. That's a must. Okay, so I explained the targets, the 2 big targets, this one and that one with the retest. It's already recorded in the streaming. If you were not here for the beginning of the streaming, it's quite important to look at this. If we look at the Dixie, I didn't went through Dixie, same thing as we had. So this is the extension of this move. Now, if we extend this move, well, that's not bad. That would be cool. We would have a double top on the 76.40, okay? If we just take an extension of a 100% of that move, we would go there. So, and 1 to 72, we would go higher on the, sorry, I'm looking at what I'm doing at the same time here. On the Dixie, this is the area that is definitely important because we would have, when we would come here, we would have the confluence of the 200 daily moving average here, the confluence of the weekly 50 moving average there. We have some extension, and if we look at that on other perspective, you see we have there a 100% feed there. We have a lot of things. If you take this area, let's say around from 105.50 to 106. If we look at the other charts, you see 105.50 to 106. We are here. We have some quarterly volume resistance. We have some PGX, PG top. We have this thing, which is probably a price gap that is there in blue. So we have a lot of things. From the volume perspective, what we have there at 105.50, let's look at it. It's not the same data feed, so there is a little bit of difference. So we should be in this area with a YTD. Important here will be the retest of this. When we will retest this area, we can see again some reaction. We saw it in the past here. It's a very important POC there. It has been tested already, so it's no more virgin, but it would be reactive. Where are we now? This is a Q123. It's not written. It's a mistake I made here. Q123. So we have the Q123 here. We have a Q123 there. It's not the right color. Sometimes I do things too fast. Okay. So that's where we are pulling back from. We need to break this previously QPOC. So which means this is giving some potential bounce on the DXY. You see how well this one has been holding here. Same thing it can do on the upside now. You see this area of resistance there due to this volume there. Now, if we go back here, 105.50 to 106, so we have here some very, very, very big fib at 106.30. I don't think we would get there. Here, 106.30 and another 38.2. So you see, we have a lot of tools to be looking at something in this very important area when we would get there. So for now, if we go back to the regular thing, I will stop the recording for today. I keep speaking for you in the room only.